Good morning, good evening, good afternoon, traders. Thank you again for joining us here at TradeDelicious. I'm your host of the Learning Hub, Aaron, and I'm super excited to share some education with you guys. Hope you guys get some real value out of it. We're talking about something super keen, happens 4 times a year, affects every trader, whether you're a swing trader, a scalper, whether you trade currencies or you trade equities. This is something for you. What am I talking about? I am talking about the earnings report. So, earnings reports, what in the world are they? The earnings report is a show stopping event when companies report their quarterly performance. These reports are released every quarter during a 6 week time period, and each publicly traded company, announces just before or just after the market close. All of these companies are also subject to the rules and regulations from the SEC, otherwise known as the U.S. Securities and Exchange Commission. They require all these companies to post their profit and loss, all of their financial documentation to make sure everyone is on the up and up and everyone has a level playing field. And this is why it's an incredibly useful tool for traders to benefit. Now, what's included in an earnings report? It's a little complicated, but it's really focused on financial performance, right? The three key items that we're talking about here are earnings per share, revenue growth, and guidance. Those are certainly the most important portions of the earnings report. We also get some details on notable changes in the business. Sometimes businesses will talk about their competition, or they'll talk about how the market has changed for their particular industry, or they'll even talk about some of the new ideas that they're pushing forward through their research and development. And in addition to that, we even see some analysis from the company as to where they can go from here. The first of those key items that I discussed were the earnings per share. What in the world does that mean? It's a weird abbreviation. You see it all over the place. All you need to know is it's a basic equation that looks at net income and preferred dividends being subtracted from net income. That remainder is actually divided by the weight of average common shares outstanding. In other words, the amount of shares just floating in the ether, right? So just give you an example. If a company posts $1,000 in net profit and they pay $100 in dividends to all their investors in total, that would leave them with $900 left. If they had 1,000 shares outstanding, you would take that 900, divide it by 1,000, and then you get 90 cents EPS. Pretty standard for a lot of different tech companies. I'll show you guys some more examples later in this presentation. Now, I did mention that revenue is the second of the three really important key performance indicators for an earnings report. Why in the world is it revenue? I would think, coming into things, that it would be net income. If you're thinking along the same lines as me, it could be a little confusing, right? Well, you have to remember that this market is incredibly predicated on the performance of tech. If you know anything about tech, you know that tech doesn't really make money, especially in the beginning. So let's jump into it. Markets are focused really on growth right now. Not what a company was yesterday, not what it is today, but what it could be in the future. Netflix is a really good example of this. Netflix IPO'd after one of the worst bubbles we've seen in the market history, after we saw the tech bubble burst in 2000 and 2001. Netflix had a market cap of $82,500,000. That's an impressive market cap for any IPO, especially considering that they were losing money coming into this IPO. In fact, in Q3, immediately after they were able to IPO and do quite well, they had lost $1.7 million in net income. It's still better than what they did the previous quarter of the previous year, where they lost $5.6 million, but still the value of this company was continually climbing, although they're losing money. What's going on here? Well, their revenue growth was continually growing. Although they lost 1.7 in net income, their revenue had grown to 40.7 million
from 18.9 million just the year prior. This gives investors in large institutions a lot of confidence that although the company isn't very profitable right now, although they don't have much cash in the bank, it's likely that they will in the future. And for a company like Netflix, my goodness, were they right. Since they IPO'd, they've had several splits. Although they IPO'd at $15, if you were to take everything and adjust it for how many splits they IPO'd at $15. With the current splits, it would be the same thing as them IPOing at around $1.11. So that's an incredible amount of growth because the stock is still trading comfortably in and around, even above $300. Now, guidance. We often hear about guidance, especially on CNBC, on Yahoo Finance. What in the world is guidance? Guidance is really a company's public estimates of its future's earning outlook. Guidance can be positive and negative like anything else, and it can coincide with the performance of the equity. So as you can see here, NVIDIA, super hot stock as of late, they had a net revenue of $7.2 billion. You have to remember these numbers shown in thousand are actually measured in millions. These are all how financial statements are written. Don't ask me why. But they had a revenue of $7.19 billion. They expect their revenue to be $11 billion in the second quarter of 2024, just a year from the time of this recording. That's incredibly impressive. It's incredibly meaningful. And if they continually produce these kinds of numbers, they continually produce this kind of growth, it is natural for investors and institutional organizations to believe that NVIDIA will continually grow in value as an equity. Now you're starting to see why this is an incredibly valuable tool for us as traders on a day-to-day. Because these earnings reports produce volatility. Let's take a look at something like Tesla, one of the hottest stocks that's been in the market for years now. This is a quick table that I was able to put together looking at Tesla from late March of 2023 into their first earnings report, which came out the market close of April 19th, 2023. On average, each session had a volume of approximately 125 million, give or take, executions for that particular asset. 125 million buys and sells. Earnings day happens, and all of a sudden that jumps from 125 to 210 million executions. This is a massive deal because this means a volume jumped 60% literally overnight, meaning that there was a lot of opportunity during that day and there was a lot of growth for potential traders. I guarantee you, people doubled accounts and people lost accounts on the same day because of all this volatility. The headline for earnings. Really, most places that you see, most press releases are going to focus on two items in really close detail. They're going to focus on earnings per share, and they're going to focus on revenue, as we've already discussed. Guidance is a piece of the puzzle, but guidance, like you saw in a couple slides ago, it's really wordy. It's not actually just data being pushed out. It's a collection of opinions that has to be explained by the economist or the financial advisors working in-house for the company in question. Whereas earnings per share, revenue, it's just a number that could be pumped out and we can see whether or not it was a beat or a miss. As I said before, those announcements are also a piece of the puzzle, but they're not as big of a deal as the other two because, again, you can see those very clearly. Short-term analysis for traders, forecasting is everything. You know, a big beat is great. A big miss can be catastrophic for an equity. If we look at NVIDIA, in this case, we had a huge beat and a huge beat on not just revenue, but on earnings per share as well. Also, those announcements, that guidance played a really big role because Nvidia announced a new focus on AI during their earnings call, making their equity, making their stock go absolutely ballistic. Not only are all these numbers posted, but anyone who is a shareholder of these companies, and often people that are not shareholders of these companies, may take part in an earnings call that's done live, usually by the CEO and CFO, maybe even the chairman of the board of these companies in questions, where they can hear from the horse's mouth about the details of these announcements and the details of this guidance. Talking a little bit more about NVIDIA, again, these earnings reports produce incredible volatility. So what happens after this earning report comes out? We see a massive gap. NVIDIA goes from roughly $305 to $380, literally overnight, from a Wednesday to a Thursday. 26.7% growth in pre-market before the market evens open up for this particular stocks. Performance in these two areas, in earnings per share, in revenue, can mean a big deal, but overperformance in either in both can result in crazy moves like this. Now, we're all traders here. I'm sure you're all wondering, how in the world do you trade this thing? Everyone has different styles. If you ask me, I'll tell you something different than Jordan. Jordan will tell you something different than Don. Don will tell you something different than Saul and Ruben. But the core of it is, you don't want to guess the direction on this thing. Never hold a position hopping into earnings. You don't know which direction this thing could go, and you don't know how the earnings report is going to be received by the market. Always wait for the data to release and then find your direction. A lot of people will look at this chart and say, if I got in the day before at 305, I would have made so much money on 100, 1,000, 10,000 shares or whatever. And you could be 100% right. But what if it went in the opposite direction and you were long? You'd be screwed. Your account would be up in smoke and you would join the graveyard of hundreds of thousands of other traders that thought they could beat the market. We always advise caution and discretion here at TradeDelicious. Really, that's the whole nine that I have for you. Please remember to always be careful when you're trading these assets. These things are moving so crazy quick nowadays, especially those involved in hot topics like AI or tech in general. We always want you to be cautious and trade well through these turbulent times. Remember that an earnings report is always going to be around. There's always going to be these opportunities. It happens 4 times a year, and you'll be able to take advantage of that as these things pop up. Currency traders, pay attention to something like Apple. It has a really big effect on the American economy. Equities traders, of course, trade stocks that you're familiar with. Don't go out there and trade Walgreens because it's hot. Focus on something that you're comfortable with. Futures traders, same idea as Forex traders. Something like Apple, something like Microsoft. These assets move the larger indices, and therefore watching them could be an indicator for a better trade. As always, I'd like to thank you so much for joining us here at TradeDelicious for the Learning Hub. I've been your host, Aaron. I hope you trade well today and you trade delicious. I'll see you.